Okay, we'll now continue with problem 14-1A or 13-1A, depending on which textbook you're working out of. But it's our statement of cash flows, I guess Cromie Incorporated. We've completed the cash flows from operating activities section. We came down to our final number for section 1, net cash flow from operating activities. And I hope the next two sections are, like I promised, much easier. I believe they will be. Our next section is cash flows from investing activities. Here we just want to look at cash coming in from selling investments. That'll be a positive number in this section. Cash going out to purchase investments will be a negative number in this section. Okay, and for our purposes on the statement of cash flows, remember, buying or selling property, plant, and equipment, also called fixed assets, would be considered investments. So first, we want to see, did we sell any investments? Or did we sell any property, plant, and equipment? Well, we already read on C, there were no disposals of equipment during the year, so we didn't sell any equipment. On B, though, they tell us equipment and land were acquired for cash, so there's going to be cash going out to purchase equipment, cash going out to purchase land. But come back to A, we've read that one already as well. Investments were sold for $280,000 cash. Well, that's cash coming in. I usually list in these sections the inflows first. If it lets me do that, I will. Yes, cash received from sale of investments. Now, you guys, that could be investments in stocks, bonds, which would be respectively equity or debt securities. But what it's not is a company issuing new shares of their own stock. That would be a financing activity. So, for instance, if Walmart issues new shares of their own stock and they receive cash for that, then that's a financing activity for Walmart. But if Walmart sells some shares that they own of Coca-Cola stock, that's an investing activity. I hope you see the difference. If a corporation issues new shares of their own stock, it's a financing activity. But if they buy or sell shares of another corporation's stock, that's an investing activity. So cash received from sale of investments was $280,000. That's cash coming in. Okay, now, it also says equipment and land were acquired for cash. Well, let's see which one they want us to do first here. In reality, it really doesn't matter, but less cash paid for purchase of land. Okay, now this is going to be cash going out, so we'll show it as a negative number. Let's go to the land account. Okay, at the end of December 2015, its balance was 0. At the end of December 2016, the balance was $328,000, which means we must have bought land that we paid $328,000 for. And it says both equipment and land were acquired for cash. So that's, again, cash going out. So it's going to be a negative $328,000. Okay, next we've got cash paid for purchase of equipment. Okay, again, it's important that there were no disposals of equipment during the year, so we can take the difference in the beginning and ending balances here. So let's go to the equipment account. The balance at the end of 2015 was $553,120. That balance increased by the end of 2016 to $705,120. Okay, so what is that? $152,000, I believe, is the difference. It's a negative number, but let's punch it in. It's equal to, I'm going to put it in backwards this time so it shows up as a negative number. $553,120 minus $705,120. You're just taking the difference in the two balances. And it is cash going out, so I want the negative number here. $152,000 must be what we paid for equipment. It's the increase in the equipment account balance from one year to the next. Now we'll sum these, you guys, to get our total for the investing section. It's equal to $280,000 minus the $328,000, or plus the negative $328,000 plus the negative $152,000. That comes out to a negative $200,000. So over here, notice the wording changed. We call it now net cash flow used for investing activities rather than net cash flow from. It's a negative number, so we change the wording. All right, now let's go to the financing section. Here we'll look for cash coming in from any financing source. And then that would be an inflow. And then we'll deduct cash going out to any financing source. So really the three financing sources that could be utilized by a corporation would be issuing new shares of stock, issuing corporate bonds to the investing public. That's just a form of borrowing from the investing public, and which you'll talk about in another course if you go further in accounting. And just a traditional loan. You know, they could borrow money from a lending institution. Alright, so let's read through our additional information. Okay, they tell us on D, common stock was issued for cash. Well, the accounts that would increase if we issued common stock would be in the liabilities and stockholders' equity section. Our common stock account would increase. And then if we received an amount above par value, the paid-in capital in excess of issue price over par common stock would also increase. So it's going to be the increase in those two accounts added together. Okay, so let's see if I can get that in there correctly. This is going to be cash received from sale, or you could say issuance of common stock. All right, now let's put this in. We want to say $150,000, the balance in common stock at the end of 2016, minus $100,000, the balance in common stock at the end of 2015. Plus the difference in the beginning or the ending and beginning balance in paid-in capital excess of issue price over par common stock. That's $417,500 minus $280,000, the balance in that account at the end of 2015. Alright, so the difference in the common stock ending and beginning balance plus the difference in the paid-in capital in excess of par common stock beginning and ending balance. We want to add those two together. And that gets us $187,500. That's the amount of cash this corporation received from issuing new shares of stock. I've given up at this point on trying to pronounce their name. Okay. Did we have any cash going out to a financing source? Well, this would include principal payments on loans, not interest. Interest expense would be an operating activity. Any interest expense would have been deducted in coming to net income. And there was no interest payable account, so we didn't have to deal with that one in our current liabilities. So principal payments on loans, principal payments on bonds, or paying dividends to shareholders. Here they tell us on F there was a $96,000 debit to retained earnings for cash dividends declared. Well, you guys, just because dividends were declared in a certain fiscal year doesn't mean they were paid that fiscal year. And we have this dividends payable account to take into account here. as well, so there's a little bit of calculation to get this number. But we're going to say less cash paid for dividends. Okay, so what we want to do is take the beginning balance in dividends payable. We can assume that got paid, that whatever's in dividends payable at the end of December 2015, that balance is $19,200. We can assume that got paid during 2016. Otherwise, the shareholders would probably be up in arms. All right, we'll add to that the dividends declared by the board of directors during the year, the $96,000. That's the most we could have possibly paid out in dividends this year. And then we'll subtract what we did not pay, and that would be the balance in dividends payable at the end of December 2016. So what we'll do, we'll say the beginning balance, $19,200. We'll assume that got paid this year, so that should be a part of cash paid for dividends. Plus, the most we could have paid besides that would be what was declared by the board. That was $96,000. All right, that's the most we could have possibly paid out, but we didn't pay it all out because we still have a balance in dividends payable at the end of 2016. So we want to subtract that out. It did not get paid in 2016, and that amount was $24,000. The balance at the end of 2016 in dividends payable. And when we put that in, that's going to give us our cash paid for dividends. Something was off. Okay, maybe I should have put that in parentheses. Equals 19,200. Oh, I know what it was. It was supposed to be a negative number, and I had it in as a positive. So it's 19,200, the dividends payable balance at the end of 2015, plus 96,000 dividends declared during the year, minus the 24,000, the dividends payable balance at the end of the year, or the portion that did not get paid. So that's 91,200. It's showing that that's incorrect. We just need to enter it as a negative number. So negative 91,200. And there we go. All right, now we'll take the difference in these two to get net cash flow from financing activities. It's back to being a positive number, so please note the wording changed again. And there we go. Net cash flow from financing activities is $96,300. Okay, now you guys, to get the change in cash for the year, we're just going to add together the totals from our three sections. And that'll give us our increase or decrease in cash for the year. It's going to be a positive number, so they already have it over here for us. Increase in cash. So it's equal to 143,540 plus the negative 200,000 plus 96,300. So our increase in cash for the year is 39,840. All right, now I mentioned this earlier in the lecture video, but here's how you check it. Our cash balance at the beginning of the year, well, that's cash balance at the end of December 2015, becomes the balance at the beginning of January 2016. That number is $585,920. Okay, now we're going to add these two together, and when we do, we should get our cash balance at the end of the year. That's the December 31, 2016 cash balance. So it equals this one plus this one. Enter. We get $625,760, and notice that matches the cash balance at the end of December 2016. Now there's an optional portion down here on this template. We're not going to do that, so don't worry about that as far as your grade goes. Now let's go up here and see where that leaves us. Yeah, we're at 100% without that optional portion. I'm glad it's that way. So you guys, This one can be kind of daunting. Practice it. Go through the video and work it with me on the template I provide. And I don't think you'll have any trouble then with a homework problem. It's very similar. It's PR14-1A, or excuse me, PR14-1B, or if you're in the other book, PR13-1B. If you have any questions, please be in touch. I hope you have a great day. Thanks.